Yeah, and maybe going back to kind of like the original question about which of the three kind of, or Hyperliquid, Solana, or like a front end trading platform has like kind of the advantage. I think it's probably because the users don't really look underneath the hood. They're usually not aware of what's going on underneath. And like I think trading like front end trading platforms kind of have the advantage because of that. They're their problem becomes just optimizing for user experience. And they probably don't have to worry as much about the infrastructure.
Nothing said on Lightspeed is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the companies, funds, or projects discussed. Hey guys, welcome back to another roundup on the Lightspeed podcast. Today, we're missing out on our dear friend Carlos. He said, you guys are too broke and too fucking boring for me to be on this show. So today we have Sam taking his place from the research side of things. But of course, we're glad to have Sam on. He's deep in the weeds on lots of things Sol related. And then, of course, Joe and Toma from the Blockworks advisory team. How are you guys doing today?
Yeah, doing very well. Thank you.
Doing good.
Yeah, Sam, doing well. Happy to be here.
I can tell everyone is very excited to have a lot of the same conversations from last week, this week, but maybe with slightly different nuances to them. Hopefully we can keep it interesting. We'll see. I do have to do a quick shout out before we get into anything. Das Asia, Das London. Das Asia, totally new to Blockworks this year, coming up October 7th in Singapore alongside or sort of like, at the same time next to Token 2049. So if you're out there for that, come for Das Asia as well. Sick little double event. You can get in while you're in Singapore, maybe for a few days or for a week, or if you live there, cool. And Das London, November 10th through the 11th, kind of like our premier institutional EU focused conference, sort of like as a counterpart to the NYC DAS. So we'd love to see you guys out there. Check out and come see Kunal in Singapore at Das Asia. And hopefully some of us will be at Das London. I don't know who they'll get to send to Singapore. Those flights are pretty long and expensive. So probably not the whole team will be there, but maybe a few folks. So come out, see us. I'm sure you can find links in the description. Maybe get some cheaper tickets now, or at least lock them up before they all sell out later in the year. We'll see you there in a few months. On to the news for today and the topics for today. I think we're all tired of him. We are a little annoyed with him probably at this point. I would say we were kind of annoyed and done with DATs in general, like last year, maybe a month or two after Bitminer and some of the other ones started raising capital and their stocks went up. But we're kind of eating some of the, like, I wouldn't maybe fallout or just like kind of the residual of what happens when a bunch of these businesses bought spot crypto assets at elevated prices and are now, at trading at discounts to their MNAV, or like considering maybe they have to sell some to deal with obligations that they might otherwise have. And we've been dealing with that with MicroStrategy and Sailor for a while. The big update from this week, at least, is that MicroStrategy strategy has, not that they've done it, I don't think they've sold any BTC as far as the market is aware, but they've kind of like authorized the ability for the company to sell up to it's like 1.5 or 1.25 billion worth of BTC if they need to. So I think this is their way of kind of assuaging the market a little bit to say, okay, guys, we have enough cash right now. We can pay, the stretch dividend guys, and we're good for 20 months or something. But the language in the tweet and like this announcement that they put out was like, we have 24 months, but if we also sell extra BTC, then we have something like 30 months of runway on the dividend. So they're sort of pointing to the fact that if they really, really needed to, they could. But it seems like the goal is to avoid selling any Bitcoin, at least in the short term. I don't know if that serves as like, maybe this kind of puts in a little bit of a bottom on that sentiment, or maybe people fade that a little bit and they say, I don't know, Sailor, you're dumb. We need to force you to sell. Not sure what we think about that, but there's been some speculative activity in the markets. I don't know. What do you guys think about like kind of the broader sentiment? Do you think this has kind of put in a reversal of themes, or you think unrelated to the Sailor strategy stuff? Market's just been doing well anyway.
Yeah, I mean, it seems like they're doing like some type of forward guidance and like slowly edging it into the narrative. I guess they don't want to scare the entire market straight away, even if they do feel like selling Bitcoin is the right thing to do. And like when we had Luke on 0x Research, he went out through all the whole process and why it's a good idea for them to be shoring up the balance sheet and to be selling some Bitcoin. So I kind of agree with that take. But I mean, as long as the market's scared of this, and if they do actually start for selling, I feel like a lot of the market is still going to follow it. But possibly we could see some decoupling from Hyperliquid, some good perp dexes, and maybe even Solana. But that's how I'm kind of looking at it.
Yeah, I have not too much to add there, but they also bumped up the stretch dividend, I think, 50 basis points. So it's at 12% now. I don't know if it's delaying the inevitable slightly, but yeah, it's worth monitoring, I guess.
Yeah, that's maybe the one takeaway when we chatted on 0x last week with Luke. His sort of viewpoint was like stop kicking the can down the road type of viewpoint. Like just kind of bite the bullet, maybe sell some BTC, buy down some of the stretch, kind of liabilities, if you want to call them that, and get that sort of out of the picture, and make really just sort of like bring down the leverage that's currently acting on the business in that way. It seems like they're going to try to continue kicking the can down the road as long as they can. Like you said, bumping up that dividend rate to 12% now. They seem willing to just like kind of play with the leverage and are hopeful that, BTC will just keep going up and to the right. I like the comment you made, Sam, and I guess I'd be curious. This is kind of like a broader theme that I think we've been touching at a little bit ever since this like more institutional onboarding narrative started for crypto, in that do you guys have a strong opinion now, or has your opinion changed at all in terms of whether you think, because I think historically, if you were to go back years, people would say like Bitcoin's going up and to the right forever, and like that kind of like brings the rest of the industry along with it. But I think you could, like you said, Sam, I think you could make an argument that some of the other things that are happening, like the trading activity, the perps exchanges, the spot exchanges, the trading of equities and other assets, like I don't know, could BTC go sideways forever and you see just more of the real revenue generating activity that's happening go up and to the right, and some of the more narrative stuff kind of continue to dwindle?
Yeah, I mean, I'd say that'd probably be very positive for the industry if that sort of thing happens. Like Hyperliquid's obvious case with all their buybacks and stuff and generating real revenue. If Solana can keep picking up with tokenized equities and that starts to build a fundamental picture there, I feel like that could definitely see Solana decouple from Bitcoin, even if it stays stagnant. But then obviously there's lots and lots of coins, like L1s, L2s, that there's really nothing that much happening. So I wouldn't be surprised if they continue to drag down. But then that being said, I guess some other L1s, even if they don't have activity, they could start being pitched as like Solana beta if Solana starts to decouple from Bitcoin. So it's hard to say exactly what would happen, but yeah, it wouldn't surprise me if Bitcoin keeps tracking sideways for the next year or so.
I do think also regulation is a big, part to this, where if you see clarity going through and I guess giving these tokens with revenue a better, I guess, picture going forward, you could see a sustained little bull market in certain names. One, like, yeah, Bitcoin and the broader market trade sideways.
Yeah, I guess that's a fair point. Like clarity and specifically some of the market structuring things, and maybe enabling institutions to, interact with more of these assets or do more experimentation with trading on chain, things of that nature. It's not necessarily like a Bitcoin positive. Like I would say Bitcoin itself as an asset has been pretty accessible ever since, the ETFs. There's not like there's DeFi on Bitcoin really. So just exposure to the asset has been a thing for a while now. I think if you maybe comped it to like when gold ETFs became a thing, that was probably like, sort of like the big upcycle moment. So maybe that's an open question of like, I mean, gold has had periods where it's gone sideways for like a decade. Maybe Bitcoin's at a point now where it's big enough to where that might happen, but you might still see these crazy periods over, 6, 12 months, 18 months where it goes absolutely nuts and then it does nothing for a while. We'll have to see.
Yeah, I definitely agree with that. Like you track how our gold does well, and usually it's in times of like monetary uncertainty, inflation concerns and stuff like that. So like maybe this is like the time that Bitcoin actually does start to track that gold narrative, which might not be that favorable in price, but could make a lot of sense. And yet to your point, um, usually with gold, like we saw in the last year or so, although it's come back, it has these periods of 6 to 12 months where it just goes ballistic. And that's actually been pretty common over the last like 20 years. Usually it does nothing for 5 years and then has one really good year. So that's definitely a likely scenario, in my opinion, for Bitcoin.
Cool. We can leave it there. We don't have to get too macro pilled on this show. I think, broadly speaking, kind of a let's see what happens type of environment for at least some of the majors there. Today, though, it would be great to continue a conversation. I mean, we've been talking about tokenized assets. I think maybe some folks are a little tired of it, but it's probably a good time, I would say, to reflect on what the numbers are telling us now. Like, obviously, the SpaceX IPO moment was like kind of a big moment across the board. Like on Hyperliquid, Perps did very well. Solana Spot did very well, thanks to like Backpack and Sunrise teaming up and getting that live day one as well. There was a ton of trading volume there. I think we've seen some of the trading activity, at least on Solana, around some of the tokenized assets come down and trend down a little bit in the past week. There's been a little bit of rotation, like trading of SpaceX and then trading of some of the memory stocks that got listed pretty quickly. Micron, SanDisk, DRAM, the ETF. But the latest numbers for like the past day or two, maybe end of last week as well, are showing a little bit of a drop off. Curious if you guys have any strong viewpoints or takes there. Is this kind of natural, expected, and whatever the next listing is, we'll see some excitement there, and maybe the activity tails a little bit until we see another big asset kind of have its run or its moment.
Yeah, I mean, based on like the backpack strategy, it seems like they're trying to slowly release tokens that are popular at the moment. So obviously when they have like after market earnings calls, it highlights the value prop of 24/7 trading. So that's what they did with a lot of the AI stocks we saw last week. And obviously SpaceX over the last couple of weeks, but that's not necessarily the most like consistent amount of activity. But I feel like they just got to continue to look at the next big theme, the next big stock that people want to trade, and continue to do the same process we saw in the last couple of weeks, but with hundreds of more stocks, but releasing like 5 to 10 stocks per week. And then once I guess we get above a certain amount, I feel like the overall activity will start to look a lot sustainable. But yeah, to your point, the last couple of days have dropped off a bit. And I guess that's a part of the process.
Yeah, I agree with Sam here. I think listing velocities, I guess, the most important part of this. You have to be proactive. You can't really be reactive because then it's all the appetite is gone for those names. I think Hyperliquid did pretty well here, where they just listed, Hyperliquid and Trade XYZ just listed everything, and as quickly as possible. I don't know if there's a technical limitation where I guess Backpack and Sunrise can't just list 50 big stocks. Do you know if Sam? Do you know if that's something they'd struggle with, or is this just a attention thing?
I think it's more of an attention thing because, like, from what I've seen, like they could literally do like the entire S&P if they really wanted to, very quickly. But I don't think that's the best approach to start this thematic. I don't know if you know any more, Danny, but that's what I've heard.
Yeah, as far as I understand, I think the only concern would maybe just be from a market making perspective. You'd end up having a little bit less liquidity across each pair in that instance, but I think more so from like a headline impact POV. I think you're right in that the strategy and the approach seems to be to kind of attack the highest interest and highest potential volume targets first, and then you kind of like you fan out, and then you'll end up hitting 50, 100 assets down the road.
I do think you could bring on like to top 50 names or something. I don't know the technical like limitations, of course, but it seems a lot of these already have Xtalks listings. I'm imagining it's not the most difficult thing for prop AMMs to code these. Yeah, I think that could probably be better. Because then you keep that attention side as well with these big listings and also have a sustainable base of trading activity.
Yeah, I think that makes a lot of sense. One thing I did see that I think like exemplifies a trend that we've been talking about is I saw Ryan Connor tweeted out this Perpstex trading volume share chart of like some of the major assets that have had big runs in recent history. And so you can kind of see like gold share was up near 60%, and then silver had a bit of a run and took up 40, 50%, then oil, and now SpaceX. And so I think it highlights that idea around listings velocity of when there's a really hot asset, you want to make sure you list it and have it available for people to trade. And I think that kind of lends itself to what we're talking about with Backpack here as well. It's like maybe they could go and just do like 50, 60 assets, but like if their attention is doing that and their attention is not doing, getting SpaceX, getting the memory stocks, getting whatever's hot like that week, maybe it leads to a kind of a overall loss of potential trading activity. And that might be meaningful from the perspective of like, if the target customer is the people that are wanting to trade these like high volume, high attention assets, then you might miss it. You might miss out on attracting, users who specifically want to trade that most impactful asset at the time.
Yeah, definitely. Yeah, it seems to be definitely the marketing approach, and yeah, I completely agree with your point there that you want as many eyes as possible, especially on whatever theme is coming up. So I feel like if a big theme does come up in whatever equity, they can list it straight away. So they're ready to do that. But like if you've been looking at the timeline of the last week or two, like there's massive coordination approaches so across like almost every protocol of the listings that they are doing, which I do believe is a smart approach to get as many eyes as possible on popular names. And also, I feel like another factor is like coordinating with prop AMMs and stuff like that and market makers. Um, just like we're in the very beginning of tokenized equities, so possibly helping them get more comfortable, give them more of a heads up. They're probably still testing their strategies with this whole approach. So I feel like that might also be a reason to take your time here to really get this market structure right.
Yeah, and maybe one thing I'd just like to add about just the whole conversation about volumes is that volumes can be like analyzed and scrutinized, and I think these trends are mostly indicative of things that are happening in the short term. But like in the grand scheme of things, we're kind of at this proof of stage concept, and nothing seems to be breaking, which is great. And as that continues, like it should over time just give the confidence for the more serious players, to treat Solana at least as a viable venue.
Yeah, I think that's a great point, and something to keep in mind as well with a lot of this activity. Something that I think is maybe like an interesting open question. Obviously, nobody's going to have the answer to this, but I think it does open this idea of, we're seeing Hyperliquid continue to have great success on the perp side. Solana, we know has had success on the spot side, but only just now are we starting to see that for some of these other assets that were not kind of tradable up until recently. And it does make you wonder, like, the reason Binance has been so successful historically and makes, a ton of money as a business is that they really are like an all-in-one offering. Obviously, maybe not within the US, but kind of outside in more of the Eastern world, you have the access to trade, crypto spot, perps. They're doing stock trading again now as well. They can kind of act as that all-in-one platform. And it makes you wonder, like, Hype spot has never really been that successful. There's not a lot of spot activity there. Obviously, we've talked about Solana perps at length. Still, really, like, there's nothing super competitive as of yet there, even though a lot of teams are trying. And maybe the growth has been good from a very small base on some of these newer apps. I don't know. Do we see a future where the two of these like platforms can coexist in this way, where like Solana dominates spot, Hype dominates perps, and you see like these front end apps that kind of integrate them on the back end just do well because they have access to a good perps place and a good spot place, and it doesn't actually matter that it's like technically two separate platforms under the hood?
Yeah. My base case would probably be like Hyperliquid continues to dominate perps just because you need its architecture per se to actually do very well, where Solana's roadmap is still working on that process, but Solana's already proven spot can work very well, as well as with much larger distribution. So I would expect Solana spot volumes to continue to pick up. But to your point, when looking at Binance and Coinbase developments, that's something I haven't quite worked out yet. And I'd be curious to hear your guys' thoughts, whether that's like a major concern for tokenized equities developments on Solana, whether it will be synergistic. That's something I'm still, I guess, trying to work out.
I do think it's interesting that because spot equities on Hyperliquid has been tried time and time again, and it's just never, like Felix has an integration with Ondo. It's a bit hard to discern the volumes there because it's RFQ and it's pulled together. And I think Denari recently listed SpaceX spot, but that's completely died down too. I don't know if it might just be a user-based thing where, all Hyperliquid users are perp traders, more Solana users are, traditional just spot, hold and buy and hold type traders. It might be that kind of thing. Regarding, I guess, centralized exchanges being a threat to on-chain volumes and activity, I don't know. I imagine Coinbase is going to offer a similar thing to Backpack, but on Base, right? So I do think they're all trying to integrate some kind of on-chain element to their offerings. So I don't know if it'll be a durable threat or just a synergy in the long run.
Yeah, and maybe going back to kind of like the original question about which of the three kind of, or Hyperliquid, Solana, or like a front end trading platform has like kind of the advantage. I think it's probably because the users don't really look underneath the hood. They're usually not aware of what's going on underneath. And like I think trading, like front end trading platforms, kind of have the advantage because of that. Their problem becomes just optimizing for user experience, and they probably don't have to worry as much about the infrastructure. Just because they have to focus on less. I think they have the advantage there.
Maybe another way of thinking about things is like when you think of the TradFi markets and exchanges that kind of dominate certain categories. It's like when you think of futures, it's the CME group, and that's where the majority of those assets kind of trade. And then obviously the Nasdaq and the NYSE are where a lot of like the major spot equities trade. Obviously, there's other smaller exchanges that trade assets that are large, but the majority of the activity is kind of like it is like a winner takes most, and not necessarily winner. For the longest time, it's really just been more of like a this is the market where a lot of the US stocks trade, and the US stocks are the biggest stocks, and so that market is therefore like the largest, that considering the fact that most of them are listed there. Obviously Korea and some of these other regions have been doing well with the AI trade, but nevertheless we do have these like big kind of like pockets of where things happen. So it's not it wouldn't be unheard of, or it wouldn't be crazy to see that like you get a winner take most type of situation with like a perps exchange or venue, if you want to call it that. And like that could just be Hyperliquid, and maybe they just continue to bolt on and take share from that perspective. And you could see the same thing potentially happen for spot. And they're sort of like, even though the assets like quoted, you might see the same tickers, they're not technically the same assets like under the hood, right? Like a perp to the spot is not the same thing. So I don't know. It could be the case that you just see some separation there, where one platform kind of dominates the liquidity for one side of that equation, and the other platform dominates it on the other side. Because I would agree with you, Sam. Like I don't see a really strong, compelling reason why Solana is going to catch up on perps anytime soon. There's a lot of talk about some of the technical improvements that can be made to the chain to like bridge some of those gaps, but we're on like questionable unknown timelines for prerequisites to be done before we can say, okay, yeah, and now we can do the thing that matters to trading. So I mean, maybe we continue along, and I think the big questions are the centralized exchanges. Like that's probably maybe the more of the core of what people should be thinking about is, does your growing user base and like growing activity, like as you think about that, is it more valuable to be like kind of this all-in-one centralized exchange experience, and you also have kind of some DeFi rails integrated into your products? Like, is that best for a consumer, or is the consumer going to go to the fully on-chain experience and like just use Hyperliquid or Solana or some front end that just taps into those?
Yeah, I mean, you ask a lot of good questions. Because like when you think about Coinbase, like already has a big audience, and they're building Base as like that DeFi backends. So you can kind of think of it like Coinbase's backpack and Base's Solana. I'd say if I'm going to take the positive Solana side, like they already have a very battle tested ecosystem, with a range of prop AMMs, DEX aggregators, and a range of meme coin activity that we've seen over the last couple of years. So in my base case, I would definitely favor them in regards to getting the lion's share of spot activity, especially versus other L1s or L2s. But then, yeah, the other point is, what if people, they're just like using Coinbase, like using Binance, they already use it a lot. Now they can buy every single stock on the platform. If it's an easy process, they might just keep doing that, which could definitely eat into market share on the Solana side of things. And on Perps, yeah, to your point, like Phoenix is like, it's doing well, but I mean, market share is still very tiny. So there's a lot of room to grow. Maybe you could argue if like JTX comes in and developed a really good front end that people love, that could help, because that's going to use Phoenix. That could help with Perps market share there. And you also have Bulk coming out, hopefully like at the end of this year. But to the point, that's not really actually within the Solana SVM, kind of like a sidecar model. So it'll be interesting, but yeah, my base case would be for Hyperliquid to keep dominating Perps as well.
I think I agree with you there, and I think the interesting thing to consider with like, you know, the Coinbase or the Robinhood or the Binance is they, like, I think we've seen it with some of the prediction market stuff. Like I think Robinhood's having a lot of success. They initially sort of partnered with Kalshi to offer prediction markets, and then they said, "Wow, this makes a ton of money. Let's spin out our own little, you know, our own little operation to do market making and quote the contracts as well, and then we can capture, you know, even more of that, the value of offering these markets with Rothera, I think is the name of that kind of like sub entity, and that's been growing quite significantly. And I think you could see like the same two steps happen for some of this other stuff where, you know, it wouldn't be crazy to see, you know, Coinbase with like if it's a base app, but it doesn't even use base under the hood, but they just like allow their users to trade hype perps and other, you know, ecosystem spot assets. But they don't care because they're going to take some surcharge fee on top of just all of the activity. Like it's obviously still high value as long as they can charge their own fees on top. And we know that the users don't care, right? Like the user of a front end in these applications is not like fee sensitive in any way. And I think that's been held up by countless examples year over year. So I don't know, you could see success like for a lot of these platforms in different ways where, you know, maybe Coinbase and Robinhood do use the kind of incumbent winners in the on-chain space for a while. That leads to higher volumes across the board, but they don't necessarily lose out because they're still taking fees on top of the activity. So it could just be, you know, positive for Hype and Soul, also positive for Coin, Binance, Hood, etc.
I do think all these exchanges are so well capitalized that they don't, I guess not, they don't want to admit, or they don't want to forego the potential like in-house solution. You know, so it's a bit like the opposite of what Robinhood did with their prediction market offering, where if they had built it in-house first and then realized, oh, this is too much work, let's just integrate Kalshi. We're seeing, because obviously spot execution on Solana is better than some centralized exchanges, and Perps execution on Hyperliquid is better than some centralized exchanges, but you're not seeing a lot of them integrate, you know, that as the back end. So I do think there's this, maybe it just takes time, or yeah, these tail exchanges just die out eventually. I'm not sure.
Yeah, and you with Coinbase, you see a similar thing with like Borrowland, like what they're doing with Morpho, I believe, which is like, yeah, someone's already built something good that's already working. They can just plug the front end in and clip some fees. So it kind of makes sense, that type of business model. The positive Solana thing when thinking about all of this is just like the fact technically now through this process, anyone can spin up a wallet around the world and buy XYZ token pretty simply. You don't have to like make a Coinbase account, make a Binance account, and depending where you are in the world, if that matters or not. Even though with Backpack, you have to be KYC'd for the stocks and for that process to be 1-for-1. But as long as some people can do that, the KYC people can do that, the fact that that's like the same thing with what's in DeFi, and that's trading 24/7, is some of the value prop in my opinion for Solana. But yeah, it's like on the work I did on like better execution than centralized exchanges. Like to be honest, like the average retail person is kind of price insensitive, irrespectively, from buying stocks to buying crypto. So I'm not sure if that's going to really push the retail perspective, but it might matter more if you see like more serious funds, more serious players join the space with the Clarity Act and stuff like that.
Yeah, I'll be interested to see, like Toma, I think you made a great point as well around, I don't know what it is, like this this reluctance to just like use what exists, and then if it goes well, then you can say, all right, let's in-house a little more of the stack and to capture more fees. Like it seems like that model was really successful on the hood call sheet side of things, where it was like, okay, clearly the Super Bowl, we made a lot of money on that and we had call sheet under the hood. What if we didn't have call sheet under the hood? We can make even more money. And like they have a very clear idea of like what that revenue opportunity is versus, I don't know. It seems like we see it so often where it's like these teams say, hey, we're going to partner with a big chain to do a thing. It's some big deal to spin out a trading app or an ecosystem of like trading stocks on chain. Takes a long time to materialize. It's like not very clear like what the actual opportunity is at that time. And we don't see updates for a while, or maybe it just like kind of fizzles out and dies. I feel like they could consistently like redeploy that model of just, oh yeah, let's do some builder codes on Hype. Let's see how big the opportunity is relative to like buying an entire exchange and running it ourselves. And if it's successful and it makes us a lot of money, then maybe we can think about, okay, how do we go down the stack a little bit more and capture some more fees.
Yeah, I do think it's an optics thing, right? If you're such a big team, I mean, if you're public in the case of Coinbase, and you forego like this opportunity where you can make 100 bips on perps, and instead you integrate builder codes and then just make 5 bips, for example, is obviously a bad look to your shareholders. So I do think it's like optics. Like, I mean, the Phantom integration, the Phantom Hyperliquid integration has like objectively been a great deal for them. They've made, I think, 25 million plus from that. But I just don't see a world where, a giant like Coinbase, Kraken, for example, just admits, I guess, before trying that they just can't compete.
Yeah, and I guess it's not quite apples to oranges in this case, because some of these businesses like already have, either they already own or they already have some semblance of like perps offerings. So maybe it's not quite so simple as just like let's tie into Hype and use builder codes, because we already have this business that's like they kind of already have some skin in the game in that sense. It might be harder to just say like let's throw that business away that we have and just kind of rebuild it in a simpler way and make less money on it potentially. But I don't know. Maybe we'll see. I don't know. In the age of AI, we're just seeing these teams, like we're seeing Brian Armstrong come out and tweet and say like, yeah, we don't need as many people. We built this great stack. We're using more tokens for AI than ever, but also our costs are going down, and AI is solving tickets for us, and we don't even need customer service reps. Which maybe that's true, maybe that's not true, but maybe you see more of an argument to take this approach in a AI like thin down the operating teams, like do more with less type of view that I think the market is like wanting to, or at least starting to like reward a little bit more, as we see with like kind of some tech layoffs and things here and there associated with, oh yeah, AI has enabled us to operate more agile with less people and get more done. So we'll see, but maybe they're just baked in and they're going to keep operating as is.
Yeah, and I mean, I forgot, but like you're seeing like Kalshi now do perps and stuff as well, so it feels like everyone's trying to do everything. And it's going to create a lot of competitive pressure. But in the end, it should be the best for the users. But yeah, in the age of AI, it feels like the barter entry or to do adjacent things within crypto or just fintech is getting easier and easier. So whether who's going to win like that one super app is the real question. So it'll be an interesting couple of years.
All right, last topic of the day, somewhat related. I feel like past year now, coverage of meme coin activity on Solana has been really like a down in the dumps type of conversation. It's kind of declining month over month, quarter over quarter, year over year, has been the majority of the conversation. People are excited in the trenches because one of our well-known CT individuals, Ansem, has a meme coin named after him, the Black Bull, and he is supposedly just airdropping a bunch of the tokens to people within the community. It looks a bit odd on Twitter because he said he'll tweet out, drop me your CA and I'll send you coins, and he just gets thousands of comments of people dropping CA. It's a very interesting thing. But I did want to share just some data. I tweeted this out earlier today. Basically overnight, the activity associated with that ticker pumped meme coin and like trading platform activity by 2x. If you zoom out on this chart, it doesn't look that exciting. It's really just a return to like the March levels from earlier this year. Meme coin activity has really been down in the dumps for a while, but a 1 day 2x of activity is pretty interesting to see just in general. Like it really like ignited a spark here. I don't have any super hot takes. Like it's kind of like a celebrity creator meme coin again. I don't know if you guys have any takes of this is just like maybe this is worth asking of whether this is kind of like a last gasp of activity for meme coins before everyone becomes an on-chain stock trader, or do you think sentiment is so low for memes that like maybe it's time for a little bit of a comeback season?
Yeah, I mean on Ansem, like I feel like someone was this morning on the morning call saying like his wallet you could see was like 70 or 80%, and now it's gone down to like 50% through just purely giving away tokens. And from reading his tweets over the last couple of weeks, it seems like he's pretty pissed off that Pump Fund never did the airdrop. So he kind of wants to take it upon himself to like give the trenches a stimmy, which is interesting. But like a big airdrop by Pump Fund or maybe like another one by Jitto, because there's some rumors about that as well. Definitely could bring a big revival to the meme coin trenches. And you did see, based on his activity over the weekend, that memes are now back up to 26% of Solana spot DEX activity, which is quite annoying for my tokenized assets thesis because they've gone down to like 1 or 2% over the weekend, even though they flipped memes last Friday and Thursday. So it feels like it is something that has a lot of potential very easily for volume to come back. Like people always love to speculate. And yeah, so it wouldn't surprise me if it does start picking up from here.
Yeah, I mean, I think just time will tell, but I'm a bit cautious because it doesn't seem like there's really any new meaningful innovation. It kind of feels like we're going through the same motion that we did in the past. Like, I mean, when Pump first launched, like it was exciting. Like anyone could create a financial asset that was instantly tradable. And then slowly there were some features that were added on, like creator rewards. But yeah, like this time around, it doesn't seem like really anything's changed. So maybe it's just a bit more indicative that there's some animal spirits kind of returning to the trenches, and there's some more excitement around Solana and the meme coin space. But yeah, I think we're gonna have to see what happens.
Yeah, I think I'm gonna agree on the hesitant side. Like, if you had to get my real take here, I would say that I do think, generally speaking, the like cohort of people that is sort of trading on chain is very focused on like the highest impact, highest, maybe it's volatility or just highest potential for returns asset classes. And in some cases that's been different categories here and there. Like metals had a run, gold and silver. People traded oil when we went absolutely crazy in Hormuz, and now for the past, like, I don't know how many years now, the AI trade has been absolutely wild. If I would say, if nothing really changes to some of the AI theses and like that build out and the continuation of returns on those assets, alongside this ongoing adoption and like bringing on board of equities to on-chain trading platforms, I would expect like that to be the continued main focus here. So this does feel like a little bit of a side quest, I guess is what I would say. And I don't expect like a big re-rally on kind of the meme category broadly, unless this, if the AI trade dies and, crypto goes back and all the assets tradable go back to being a little bit boring, then maybe that, that capital that's left looking to gamble kind of goes back to memes as that way to sort of make use of itself.
Yeah. And I guess to play devil's advocate, like if we do see tokenized equities on board in a big way and they actually bring a whole set of new users into Solana, then I guess the meme coins, they're essentially just one click away for this new user base. And like seeing the returns that are possible, it's like, I guess, an easy way to like onboard that user base into the meme coin trencher space, which could be an interesting thematic. Although I'd much prefer Solana just having a lot more sustainable tokenized equities activity and kind of putting the meme coin trenches to bed here. And also, I feel like a lot of it is price action. Like if we see Solana have another big rally back up to 200, 300, that would help stimulate meme coin activity in a big way, I believe. But because it's just like people always look to speculate on more riskier assets when they're making money. So in this current price environment, if we just keep chopping around 70, 60 to 80, I don't expect anything to come back. But if we do see another big rally, it's human nature just to want to speculate on stupid things. So that wouldn't surprise me if activity picks up because of that.
Yeah, and maybe one last chart I'll share just from a sentiment side of things is the number of token creators. I think this is maybe interesting in the sense that like Pump really did have a blow off moment in terms of like, obviously there was that massive meme run. Everyone is aware of it. That's in the space and was in the space at the time. You saw a huge number of people and addresses basically creating tokens as well, just as a result of all the activity and the volume that was happening. And we've seen that really decline, and it's like back to the lows before the initial pump moment. So, yeah, I don't know. Maybe some of this could just be a little bit of a sentiment reversal thing of maybe the amount of appetite or demand for kind of like meme coin trading is a little bit below kind of whatever the baseline level is. And so you might see this pump a little bit to kind of let supply meet demand, so to speak. And then, maybe we sort of re-equalize at that new level, because yeah, for the longest time, the trend has really just been, we had such a huge blow off moment that all metrics have kind of just been declining across the board ever since. But there are, and we do continue to see consistently, there is a certain number of people and a certain amount of dollars going in and looking for new tickers, trading new memes every day. So there is at least some subsistence level of activity that continues to trade these assets. So maybe it just needed a few more creators to be dropping, tokens here in the short to medium term. Cool. We'll leave it there. We don't need to do any price predictions on the Ansem coin. If you're out there gambling on it, best of luck to you.
Higher or lower?
You want to do higher or lower?
Next week.
Let's do higher or lower for when the episode airs in like 3 days.
It's at 100, just over 100 right now.
I'll take the first stab. I'll say over.
Say lower.
I'll say higher on a 1 week view.
I'm going to say higher. And we'll see what happens. Either Toma is the winner or the rest of the crew will be correct. Not trading it though. I don't own any of this. Just saw some tweets about it and felt worth commenting on, in the same way that it felt worth commenting on White Whale, whatever it was, a couple of months ago. A little funny Telegram sticker pack that turned into a $200 million meme coin. Great chat today, guys. I think we can call it there. Plenty of good coverage. Hopefully the market brings us some more exciting things to talk about next week. Otherwise, we'll just have to get Sam on again and let him rip for 30 minutes on tokenized equities. and what that means for Solana. But yeah, appreciate you guys coming on. And to all the listeners out there, thanks for tuning in, and we'll catch you next time. Peace.
Cheers. Thank you, Danny.